Ticker symbol ADS is up over 30% in the past year, and today we'll be looking at an established company which is gaining market share and which may possibly be an undervalued compounder. This company has solid fundamentals and efficiency ratios, and it is a growing, recovering business. So today we'll be looking at Adidas, a sportswear company. In their annual report, they say that they focus on designing and developing performance and lifestyle products that are desirable for consumers. Basically, Adidas, we all know them for their shoes and their sports clothes. The way that they work is that consumers can purchase their products either through wholesale partners, through their company-owned retail stores, and through their own e-commerce. They are highly focused on research and development to innovate and develop new desirable products in order to attract new customers. And in fact, this year they have beaten Nike to get the shoe of the year, with the Sambas rising in popularity. Their future strategy can be broken down into 3 pillars. The first one being to prioritize speed and agility in order to react faster to market changes, and therefore suffice the needs of their customers and implement the feedback that they receive from their retail partners. Number 2 is for them to keep investing in their own retail and their own e-commerce presence, without of course forgetting that their wholesale is an essential pillar. And last but not least, they want to empower individual markets to create products specifically to their own needs. This is because local relevance is currently increasing at a fast pace. But when we look at the fundamentals from this company, it really shines, except for the fact that it has a low return on capital employed of 9%, whereas in this channel we usually look for companies above the threshold of 15%. However, Adidas has an interest coverage ratio of 117 times, which is great, a cash conversion of 234%, which means that they have a lot of free cash flow to give back to their investors, a profit margin of 97%, and an operating margin of 19%, which is above our threshold of 15% again. Now, when we look at their financial analysis, they did have a weaker quarter in Q4 2023, but now they have actually bounced back. Their revenue has increased, their gross profit has increased, and their net income is now positive. Additionally, their total assets are way above their total liabilities, which is something extremely positive in such an established company such as Adidas, because this makes them a safer investment. Now, we can't forget that Adidas pays a solid dividend. Of course, it's not what it used to be in 2017, 2018, 2020, or 2021, because they had faced some financial troubles. However, in 2023, they did increase their dividend based on 2022, and although the dividend yield is small of a 0.31%, it is stable, it is safe, and it's coming from a growing great company. Now, when we look at the fundamental analysis, this company gets solid 6 out of 8 ticks. First one being that they have low liability risk, and this we can obtain from the fact that their interest coverage ratio was around 117 times. This is great because it means that even if their profits actually do fall, they have a lot of room to run in order to pay back their interest, meaning that they are in a very safe position. Secondly, they have a very solid balance sheet. And why? Well, this is because they can pay off all their short-term liabilities only using their current assets, which is great as it shows that the company is again in a very safe position. Now, this company of course pays a dividend, although small, it's a good indication, and they do conduct share buybacks whenever they can. Next, this company has been able to grow their free cash flow organically, which is rare since their revenue is not growing at a very fast pace organically. This means that they're getting their costs under control and they're becoming a more efficient company. And the last 2 that are remaining is, first of all, they do have pricing power and they have a very large existing moat or competitive advantage. And this comes from the fact that they have very large scale. They leverage economies of scale because they're the second largest sportswear producer in the world, right behind Nike, and they operate at a scale that only big companies can dream of. This means that their production costs will probably be below anyone else, their logistics are unmatched, and their whole distribution network has to be among the best in the world, and of course being the best in the industry. And now Adidas, the majority of their pricing power actually comes from their brand. Their brand is extremely distinguishable and it is a synonym of quality. Whenever I see either Nike or Adidas's sign, I of course know that I'm buying a great product. And there are a lot of loyal fans which will only buy an Adidas kit because, for example, their favorite sports team wears Adidas and they have to wear the same brand. Now, the other thing that I did not like about Adidas is that their cash flows are not extremely consistent. They have very high cash flows one year and the next year it's actually negative, and to me this is a big red flag since I like my companies to produce stable, predictable cash flows like Visa and MasterCard do. Now, when conducting a valuation analysis, it was actually tough to conduct a price to earnings ratio because in a lot of the previous quarters, their earnings actually came in negative, which means that they didn't have a price to earnings ratio. So I decided to just look at their 1-year historic price evolution chart, where if we're only looking at their stock price, it does seem a little on the overvalued side, as in 1 year has returned over 31%. But Adidas is yielding a 5.8% free cash flow yield, which is higher than the 3% long-term inflation rate. What this means is that the company may actually be at an attractive valuation, as it is growing and it is yielding higher than the long-term inflation rate. Now, when we move on to risk and possible challenges, I see two main risks. The first one is the worsening competitive landscape. The sportswear industry is a massively profitable industry with a lot of fierce competitors where tendencies change from a year to the next. For example, this year Adidas has been a big winner in the industry because their shoes have been trending for a very long time. However, what is saving them from in 2 years' time, the Samba is actually dropping out of style and another new company actually developing a shoe which eats up all the market share from Adidas or Nike. I believe that in this industry, although you have a huge brand and you're a super established company with a lot of competitive advantages, design matters a lot. And this will move with tendencies which are very hard to control, especially in the fashion industry. And now the second risk that I do see is for them to not meet their performance objectives. This is mainly due to the fact that their revenues haven't been able to actually grow at a stable pace and at a reasonable pace. They have remained stagnant for the past years, which raises questions for me whether they'll be able to actually grow at any point soon, whether they'll be able to control their costs and obtain higher profits, or whether they'll just remain flat for the next 5 years. Now, before we move on, please remember I'm not a financial advisor and this is not financial advice, so please do your own due diligence before purchasing Adidas stock. However, I do believe that this company has a strong competitive advantage with a strong brand. However, they do not provide consistent, predictable cash flows and they do not have a higher return on capital employed, meaning that they are not creating value for the investor. However, I believe that this is a good company and it will possibly be a great investment due to the fact that they are stealing a lot of market share from Nike. However, I'm doubting their low revenue growth. So thank you for watching. As always, this has been the Cashflow Compounder. Join the Patreon for extra content and there is a link in bio for a free stock if you join Trade Republic.